And Bitcoin's vol has collapsed and everyone's worried about the 4-year cycle and all these magical things. Last week, I said the 4-year cycle is like an overlay with the NDX. So if you're bearish on stocks, you should be expecting the 4-year cycle. One more thing for the 4-year cyclists. Is that what they're called? Now they are 4-year cyclists. And Bitcoin's vol has collapsed and everyone's worried about the 4-year cycle and all these magical things. Last week, I said the 4-year cycle is like an overlay with the NDX. So if you're bearish on stocks, you should be expecting a 4-year cycle. One more thing for the 4-year cyclists. Is that what they're called? Now they are 4-year cyclists.
AI was accelerating, Bitcoin was emerging, and the traditional systems he'd relied on were being challenged in real time. Innovation strategist Jordi Visser shared a pivotal moment that shaped his perspective on Bitcoin. While he had been interested in it early on, it wasn't until he began observing the rise of AI and its potential to disrupt capitalism that he fully grasped its significance. This realization forced a choice: continue operating within the traditional fiat-based system, or fully commit to the emerging crypto ecosystem that could redefine value, wealth, and labor. For Visser, the decision to embrace Bitcoin marked a turning point in both his professional focus and worldview. Reflecting on his journey, Visser noted that in 2019 he viewed Bitcoin mostly as a trading vehicle. At the time, the concept didn't fully make sense to him, and the asset wasn't yet significant enough to demand serious attention. He also observed the parallels between Bitcoin and other financial trends, like gold's retail-fueled volatility. Importantly, he highlighted the generational aspect of adoption, noting that younger people are more likely to embrace Bitcoin, while older generations often remain anchored to conventional financial systems. Visser drew similar insights from his experience presenting to a board about AI adoption. He explained that organizations have layered hierarchies: leadership, technology, and younger employees, and that AI, like Bitcoin, challenges traditional control structures. Leadership fears losing control, the technology layer resists irrelevance, and younger employees push for adoption. This dynamic, he noted, mirrors broader societal shifts. New technologies disrupt old hierarchies, and those willing to engage with them, whether AI or Bitcoin, stand to shape the future of wealth, innovation, and opportunity. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the broader financial landscape. Thanks for watching.
I've said that I've gone forward. The reason I got so interested in Bitcoin is because I believe that AI would disrupt everything and eventually cannibalize capitalism. That's what I believed. Now, it's not a negative thing in the end. It's a very positive thing. In fact, what Elon Musk says is we're not going to have universal basic income. We're going to have universal high income. And the reason is because the employees that are making the money, they don't spend money. So that money gets redistributed in a way. So the profits actually become profit sharing as opposed to wages. And that becomes something that's very easy for governments to distribute. Whether or not companies have it or whatever, the robots have it. And so whether or not you believe in that, the robotaxi getting there ends the concept of scarcity. And with no scarcity, you have to go to the place where there is scarcity. So leverage goes down in abundance. Time collapses. Those are all the things that the entire fiat system is based on. It's not just based on trust. It's not just, it's based on scarcity, and it's based on time. And all of that is what Bitcoin compresses. So I will say it again and again. I believe this moment where labor really starts to feel the pressure and the foundation of society shakes because people are worried about jobs and they're voting in people to get them there. I do believe that the crypto market is going to be a major, major beneficiary of reducing and being the deflationary force in the financial side and everything else as transactions speed up. Yeah, so you hit on two things there that I just want to make sure that. So the great thing about our relationship is you've been involved with Bitcoin for a long time. And if you had gone back 6 years ago to 2019 and someone had asked me, what's your view on Bitcoin? I'm like, it's a trading vehicle. Like I don't, the blockchain itself, I get. I had not been able to place the concept of Bitcoin into something that made sense. But at the time, it wasn't a big enough asset either for me to even really kind of think about. And things that move parabolically and then end parabolically, they don't really interest me that much. Which is ironic because that's what gold is doing right now, being fueled by retail and a whole bunch of things, but I'm sure we'll get into that. And Bitcoin's vol has collapsed and everyone's worried about the 4-year cycle and all these magical things. Last week, I said the 4-year cycle is like an overlay with the NDX. So if you're bearish on stocks, you should be expecting the 4-year cycle. One more thing for the 4-year cyclists. Is that what they're called? Now they are 4-year cyclists. You know what happened before 2017? Fed was raising rates. You know what happened before the last thing? The Fed said they were going to go on a major, they pivoted And that was the peak. They're cutting rate system. I don't know if you heard the rumor. They're cutting it. So this efficiency thing and this Bitcoin thing, the part that makes it polarizing to me is kind of where I go, I think it's a generational thing. So one of the reasons that I was interested in us sitting down doing this is because I'm much older than you.
You don't look it.
That's a different story. We'll talk about that someday. All those injections are working great. What's really important in this whole thing is that having a generational gap is important because the older you are, the less likely you are to embrace Bitcoin.
True.
And that's just a fact. I had to, one of the goals that the person who organized it gave to me was, we really want you to help inspire the board members that are here to embrace AI because we've been kind of slow moving. Now, adoption's been slow for a lot of places, but the message that I presented, which is very similar to what you just said about the view of government, is there are 3 layers in most organizations due to the hierarchical structure that's existed for a long time. You have leadership, you have the technology layer, which has grown in importance over the course of the last 30 years because of the internet, because of cloud, because of everything. And then underneath that, you have the younger employees. And what has happened with artificial intelligence is very similar to what you're saying about Bitcoin and about governments and the way younger people view this control thing. Leadership at every organization fears losing control, just like a government. The technology layer is the layer that is the party pooper in this. And they go, no, you can't use AI. The data could be stolen. Everything could go on. So their job is they're fighting to not be irrelevant because AI coding replaces them in many, many ways. So they don't embrace it. And the employees put pressure on both groups because they're like, hey, my friends are using it down the street. How come I'm not a part of this? That is a microcosm of what's happening in the world. And AI is connected to that with Bitcoin. Everything that you mentioned is exactly the way I see it. And it's funny because we go out to a dinner the night before. I'm just talking about our dinner the whole time. I chose all the people at that dinner.
You did.
And the range of ages was still about the same as last night. The difference was at the dinner I put together, it was all people that embrace
optimists.
Yeah.
100% optimists.
And embrace crypto as part. And you're talking about, one of them had been a CEO at 2 major companies. Embraces crypto. You don't find many of those people. The reason I like to have conversations like that is because we can talk about the China-US situation. We can talk about Bitcoin. We can talk about tokenization. You can't have that conversation in the dinner last night. And I had to shut down. And I'm very hard to shut down unless I run into a stubborn conversation where it's like, I'm over here, you're over here, nowhere will we meet. All you want to do is be open to the concept of abundance and how it could play out differently because a probability distribution curve has all of the outcomes that are possible. For people with Bitcoin, it's not even part of the distribution. It's a bubble, just like AI.
Jordi Visser explained the recent dynamics in Bitcoin, noting that much of the selling has come from wealthy Asian investors offloading call options, which has compressed volatility. While significant buying continues, Bitcoin's large market size around $2 trillion means it no longer moves as sharply as it once did. Early buyers, especially in Asia, initially acquired Bitcoin to protect wealth from government oversight, but many have since diversified into faster-moving opportunities like AI stocks and startups. Visser emphasized that this turnover is healthy for the market as profits from early investors are redistributed to a broader base of buyers, gradually building stronger positions. Looking ahead, Visser highlighted the conditions that historically precede Bitcoin's next major peak. He believes a new top requires Bitcoin to significantly outperform major tech stocks and for volatility to return to elevated levels. Despite skepticism or fatigue from some investors, he sees this environment as a potential setup for the next upward cycle. Previous peaks coincided with high volatility and strong outperformance, suggesting that once these conditions align, Bitcoin may be positioned for substantial growth once again. Let's get back to the interview.
Last week, at least the timing on saying that I'd be very scared if I was long gold with the China-US thing coming up.
Nailed it.
I think if there's an agreement, the risk could be fairly big. And that's because the most recent rally, which occurred during the summer, from the summertime. So from August to now, gold went up like 1,000 points after a range that traded. For all the Bitcoin people, remember, gold was in a big range, then it broke out and it got lunar very, very quickly. Here's my take on gold. And since we really haven't talked about it. So in 2007, myself and some other people at the fund that I was at, we had a gold dealer that came into the office regularly.
Like a physical gold dealer.
Physical gold dealer. because I thought the entire banking system was going to go under. And most of that came from my time at Morgan Stanley, but most of that came from before the printing press. Everything changed after I saw what they did with TARP. That changed my entire mindset and believed that at that point, we were entering a different kind of world. But during that time, I bought gold continuously. And what I said last week is, even during the period of 2010 coming out of the crisis to like 2016, gold did nothing. So I said, gold can go long stretches of doing nothing. And the reason it can do nothing is just like Bitcoin, there is no story to it that is a value story. It's just people are buying it. So the debasement trade is not a new trade, but when the banks start talking about it, doing research on it, but most importantly, when retail inflows hit record highs, which is what happened last week, retail's involved because they're attracted to volatility. And as long as they can make money in something, they'll get on anything. And gold does have a limited amount of kind of supply. And you very seldom in life are you going to see macro people that are all bragging about it and retail people that are all bragging about it, while the macro people are saying that retail's in a bubble. And yet they're all participating in gold. So I found this to be kind of unique. So my viewpoint on this is very simple. I believe the China-US thing is the single most important thing for the rest of the year. Yeah, and what he did say, to make sure I quote him properly, he said there's continuous Asian vol selling, so selling call options, and again, compressing it. So vol has gone lower, and the sellers that he talked about are selling because
they're rich.
They're rich and they want some money. But there's another angle on this that I think I've heard from people that I believe in, which is if Bitcoin has moved to a vol that's lower, and if you believe that its current size, which is now 2 trillion, and I've heard this and you may have heard it too, it'll never move like it used to in the past because it's just too big now. And it takes so much to move it that there's obviously been a lot of buying, but it's just churning and vols going lower. So it's kind of like a dead asset. If it's a dead asset, and let's use China for an example as an Asian country, a lot of Chinese individuals bought it there, partly to hide it from the government back when corruption and things were going on. But China has a bull market, and the bull market's in AI. And I can tell you, inside the AI world, if I mention Micron, well, Micron's tripled since April. That's a big company. You've had other companies like NVIDIA. Like the AI trade, you can make a lot of money, but also there's a startup world where these businesses are going parabolic. What these guys said was the people who made a lot of money there, now they're looking to make it in other places, and they've got other choices that are going to move faster. So it's a combination of Bitcoin's old, it's kind of big now, it's not worthwhile, and this is going higher. And the other thing is people have to remember the ecosystem has really been hurt this year. Most coins are down. So aside from Bitcoin, and I think Ethereum is up a little bit, you're dealing with an ecosystem where most of the coins are still down for the year. So it has not been a good trade because there's been other things to be involved in. Gold is much bigger. And I remind people, gold was up over 60% at one point this year. Well, that's over $20 trillion. So assets can still move. And that's why I believe what will end up happening is the OG selling that's been happening that has been distributed to many, many buyers. Those many, many buyers are just building a position. The people that are selling, they made a lot of money in it from back when you probably got in or when you started doing your show.
I was late.
You were late. Okay. So they got in at really good times. I just think this turnover is very healthy for the market. And I will say what I said last week. If we break through the highs at any point, the next time we get through the highs, I think for certain we are going to break higher. Now, I've been wrong on it all year in terms of where I thought it would be at this point. I heard Tom Lee's interview. I just want to say one thing before we get off about Tom Lee and Dan Ives, who are both now involved in the crypto space as of this year. Two guys that have been dead right. Two guys that wear clothes and kind of bring this hatred that they want to get. They're kind of like Tesla people at this point for the macro crowd. Like they view them as being bubble symbols, just like Saylor. It's actually fascinating to realize that we've got all these figures that have been right on AI, been right on the stock market all year, but they're the ones that are a little off. They're the ones that are now Ponzi scheming things. When you listen to Tom Lee talk on your interview, everything he said was very deep. He got into a lot of intelligent things. I think for Bitcoin, the fact that so many people have gotten, let's say, tired of it is a great sign. And I believe the next top will happen with two things that have happened both times. Number one, Bitcoin needs to massively outperform the Mag 7. That has happened at both of the prior peaks, both at the 4-year cycle. And literally just massive moves. And the second thing is it needs to happen with volatility being much higher than it is. I do not believe tops in things like Bitcoin happen with the vol being at 5-year lows. I believe they at least need to be close to 5-year highs.
The convergence of AI, Bitcoin, and broader macroeconomic forces is fundamentally reshaping traditional financial systems and organizational hierarchies. Generational differences play a critical role in adoption, with younger participants more open to embracing disruptive technologies, while established leadership and institutional layers often resist due to fear of losing control or relevance. Markets like gold and Bitcoin demonstrate that asset behavior is driven not just by intrinsic value but also by sentiment, participation, and liquidity dynamics. The redistribution of profits from early investors to a wider base of participants helps strengthen markets over time, even when short-term volatility or skepticism persists. Historical patterns suggest that major upward movements typically require both significant outperformance relative to broader markets and elevated volatility, highlighting the delicate interplay between innovation, investor behavior, and macro events. Together, these dynamics underscore how emerging technologies and shifting financial paradigms are creating new frameworks for wealth opportunity and economic participation on a global scale. What role do generational differences play in the adoption of disruptive technologies like Bitcoin and AI, and how could this impact the future of global markets? So stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.